ready to go. Hello, 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 everybody. Welcome to the first English podcast, OTW podcast. And this is a very, very special day. I'm with a very, very special person here, one of our good teachers and friends, Luis Galdão. And I would say in a very specific moment because this topic is a kind of a trend topic lately with some stuff going on related to Petrobras and the president of our country. So, but it's not the point here. I just want to stress that the people are more curious about this topic. Which, to be honest, Galdão, I don't know quite sure exactly, so I'm here also to learn from you, to have this lesson about, could I call it stock exchange? Sorry, welcome, hello, what's up?
Hello. Hi, everybody. You could call it stock exchange. Well, you could call it a stock exchange market.
Stock options. There's another name for it.
Well, what I work with is stock options, but the first level of this market is the stock exchange market, right? Which is in Brazil, it's called B3 now. So that's the first level. That's what everybody knows or at least hears about, right? So that's what happened to Petrobras, and that's where the great majority of people operated. It's very trending, not only because now what's happening with Petrobras or with the president, it's actually very trendy since coronavirus started. I don't have the numbers here, but millions of people started investing, like millions or thousands, I'm not sure, but it's a very big number of people that started to operate last year because they either lost their jobs or they have more time in their hands. So they started to try to invest or try to learn something. So Brazilian stock market had an increase, like a huge increase in numbers of operators in the stock market. So it was, which is good. It would be great if part of those people specialize and really learn and start to operate like in the long term, because that would only make the stock market grow. So there's no really it's not a bad thing for the market. It's a bad thing for people who doesn't really know how to invest, and they might lose, or they might not understand how it works. But it would be great if the majority of those people that started investing, they continue and learn and improve. That would be great.
So the more people investing, the better for everyone. Is that right?
Yes, because the stocks become more liquid, right? Because there are some companies that, for example, the ones that I operate, they are always liquid because they're too big. Too many people buy their stocks or their options that I work with. So Petrobras, it's always liquid because a lot of people work with, right? But there are some companies that they're not very liquid. So sometimes you want to sell, sometimes you want to buy, and there's not a lot of stocks available because people are holding on to it, and there's not a lot of people to trade. So the more people in the market, more options you will have to work with.
Nice. Let's go back in time a little before we come back to the present. Tell us a little bit of your history with investments in general, not only with stock options.
Well, my story with the investments, it's actually very long because my family always taught me, my brother and I, how to work with money, right? So it means like we always talked about family budget, we always talked about saving money, we always talked about making a plan, planning for the future, or even spending in the present, but like spending smartly so you have money in the future, kind of thing. So my family always talked about this. So we were educated in personal finance since childhood. It doesn't mean that I'm an expert, but means that I've been talking about personal finance since I was a kid. So I have a little bit more familiarity with the sense, right? With saving money or spending money smartly or even investing, right?
Sure.
So it started like that. So after my dad retired, when he was like 50 something, he retired. He was a business owner. He sold his companies, and he stayed a little bit retired, enjoying life, and then he decided that he wanted to work with something, and then he started to take on some courses on stock market, and he invited me to go with him, and I went. So I started learning what the stock market is, how it operates, how everything goes, right? And I thought to be very interesting. At first, when you see how the stock market operates for the first time, it's very weird. It's completely different than you expect. You don't understand what the money's coming from and what makes the stock prices go up. But eventually you understand, and then you can work with it. So I don't remember exactly the year that happened, but I would guess like it was around 2009 or 2000. No, even before. It was like 2008 when my dad started with it. So in 2008, we started learning about this, and then my dad started working with this. And I don't know, 10 years later, I just learned with my dad and I was following his job. But I don't know, so 10 years later, so I guess 2 years ago, I started working with him more closely, and then I took some courses with him about the stock options, so the option market, which is another level inside the stock market, right?
Mhm.
So so
And that leads to my second question. But before I go there, before we go there, so today you're currently investing only in stock options, or you're still diversifying somehow?
Well, it's not exact. I don't. I diversify inside the options market, but you still have to work with the stocks because what we call that. I'm not entirely sure how they would call it in English, but I think they call it structured because that's
Hmm.
how we call it in Portuguese. We call it estruturadas, which
Yeah.
is like you structure your strategy in a way that you buy the stocks and you sell the options, and then I can explain a little bit better what the options are. But it's a strategy where you combine options with stocks to make a more robust strategy where you can assess the risk a little bit more. You can make some predictions, and then it's a little bit easier to manage risk. That's why I like the option so much.
In common terms, putting the eggs in different baskets, right?
Yes, yes, you have to do that in order to manage risk. So it's one way to manage risk is to diversify and invest in different things. So not only inside the stock market, but if you invest in the stock market, probably you want to invest in the treasury bonds, you want to invest in an apartment, or you want to invest in land. Of course, to diversify like that, you have to have a lot of money, but still, don't put $1 million in one stock only. You will need to diversify many stocks or even different types of investments. But let me explain a little bit what I do now. Because the story goes that my dad retired. He started to take courses, and I started taking courses with him. And 2 years ago, I started to take another course, which is related to stock options. And then I started working with him. So, what are stock options? Those are contracts. They are similar to future contracts. A lot of people will recognize future contracts. So those are there are two types of options. One called call and another one called put. Right. So the call is an option of sales, and the put is the option of purchasing. Right, of buying.
Hmm.
What does that mean? Is that when I sell a contract, a future contract like this, it means that who's buying it is trying to guarantee the future price of a stock, right? So, which means that if I sell a particular stock right now, in the future, I will have to sell my stock with the price agreed in the contract. And I get money out of this contract. I get money out of this difference that I'm going to sell because it's going to be positive. And then that's how, I mean, in a general sense, works the stock options. I negotiate the contract, the future contract of those stocks. So that's what I negotiate most of the time. In the majority of my strategies is related to selling or buying the options, this contract, not necessarily the stocks.
Is it something related to? I kind of researched about it a few years ago when I was more into trying to understand this part of economics, that is the stock market. the stock exchange more specifically, is it related to what they call, I don't know if in English they go by this, but in Portuguese they go by future contracts. You can buy related to animals,
Commodities in
bows, for
general.
example, commodities in general. Is that basically the same thing, future contract?
I don't know if it's basically the same thing because I particularly don't know exactly how future contracts work like that. But I know that future contracts, that it's because you buy today a future harvest or a future production of oil or something with the price of today. So you buy today. So it's a little bit different because in stock options I will buy in the future, but I am guaranteeing today's not well, the difference I think it's the biggest difference here I think is this, right? I don't know exactly how future market works, but I understand that you buy today the harvest of the future,
Hmm.
right?
Yeah,
And the stock
that's it.
options, they are similar in a way. They're similar in a way because you are guaranteeing a future price. However, you don't buy today. Today you buy the option of buying in the future in the price that you set up today. So
Hmm.
you're not buying with the price of the. You're not buying. Hold on. All right, let me go. So you're not paying
Hmm.
today's price. You are paying me a value to sell you in the future in the price that we agreed on today.
No matter what happens to the market.
Well, I mean, if it goes up, if the value goes higher than the value agreed, he makes a lot of money because he I agreed to sell in a certain value, and now the market is much higher now, so he will buy from me in a lower value, and then he will be able to sell in a higher value.
Hmm.
However, if it goes down, if when the contract is up, the value of the stock is lower than what we agreed. What happened is the contract doesn't have value anymore, and the guy who bought it from me just lost it. I win the value of the contract, but I don't sell the stock,
Hmm.
but I keep the value of the contract. And the guy who sold it, the guy who bought it from me loses it.
Hmm.
So, so that's not like no matter what happens in the future, no matter how high it gets, I will still sell in the same price. But if it's below this value, there's no reason for the guy to buy from it as well because he can buy from the market.
Sure, absolutely. Yeah. Oh, I have to share you a personal thinking. It's not on the script. If you don't want to answer that, or you're like to skip this
Right?
question, no problem. Me and and our audience will understand. Uh, it's kind of course, I'm as you know, I am totally ignorant when it comes to investments. I know just the basics of the basics, right? And I know from people I respect, yourself included, how important this is to our economy, to the economy of a country, right? But I confess, and I hear this from many people, that it's hard to see how this exactly, uh, 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 plays an important role in the economy of a country. It certainly does, but it's hard to figure this out. Do you still, even at the level you are in the game, you know, uh, is it something clear to you today how this exactly plays a role to the economy of a country, any country, not only Brazil?
Yeah, that to be honest, that's something that I always think about. It's like I understand how is that important for the economy when it comes to the relationship, the stock market with the company, because it's a very good way for companies to capitalize and to basically to raise money, right? So they sell parts of their ownership to they call the equity. They sell
Hmm.
parts of their equity in the stock market so they can raise money. Basically, that's what they do. So I can see the point in that in helping the economy in Brazil because every time a company needs money, they open the capital, they make money, they invest, and they make the economy turn. However, I still don't really I still don't have this feeling how the stock market internally helps the economy as a whole because the money once the company opens the capital, right? It doesn't matter for directly. It doesn't matter directly to the company the price of their stocks unless they own their own stocks, kind of thing. So
Sure.
of course it will matter in that way. But
Yeah.
if the company doesn't own their own stocks in the stock market, the
Hmm.
value of the stock doesn't matter to the company anymore because this money doesn't go to the company anymore.
Yeah.
Only the money initially when they sold the stocks, this money goes to the company, and after that, it doesn't really go to the company, right?
Hmm.
So to be honest with you, so this money is just changing hands inside of the market. That's what's happening. It changes hands all the time.
Hmm.
So I other than seeing the money circulate, I don't also understand how it impacts in the economy so much. Like since the money, to me, the money is locked inside the market and it just changed hands. But
Sure.
I can see how it impacts the economy when the companies go to the stock market.
I would like you to tell us. You kind of touch upon it in your first explanation here. But I would like you to go over a little bit more about this calculation of risk. So,
Okay.
what is the basic strategy for calculating the risk at this specific place you are at your strategy? I mean, with stock
So I,
options and
I
everything.
have some experience with risk management because I worked in HSBC in the risk management department. So I could use a lot of things that I learned there in the bank in my work now in the stock market. But basically, risk management is knowing it's understanding the risk, knowing the risk, how hard the risk can hit you, that kind of stuff. And then when you know, or as much as you can know about the risk and what can happen, so the risk is limited or controlled. I mean, the risk is always going to be there, but if it's controlled, at least you know what to expect. So I would never lose all my money like a lot of people are worried. It's like, well, what if I put 10,000 reais and I lose everything? So well, if you manage the risk, you will never lose everything, right? But if you don't know how to manage risk, it is possible. So how I manage the risk? There are many different ways. So first, I have to know how much I'm willing to lose, right? So what I mean is you shouldn't invest money that you cannot lose. I mean, it doesn't mean that you will lose, but you cannot invest the money that you can't lose.
Of
You know what I
course.
mean?
Of
Because
course.
you can just lose money and then have to sell your house or
Yeah.
make a contract a debt in the bank, right? So first of all, never invest money that you can't lose. It doesn't mean that you will. It doesn't mean that you are comfortable losing it, but it
Yeah.
means that if you lose it, you won't lose your house or something.
It's
You know
not
what I
the end of
mean?
the world.
Yeah. So that's the first step. Second one, for example, I use so since I know, right, the value that when I sell a contract, let's say not a contract, like the option, the contract,
Hmm.
I know the value that I'm going to sell to the person, and then to contract with that, I also sell an option of purchasing because if it goes to a certain value, I will buy it. So I know exactly what's going to happen if it goes higher than a value, if it goes
Lower.
under the value. So
Hmm.
that's how we mitigate loss. It doesn't mean that if it goes down, if I'm never going to lose, but it means that if it goes down, I already know what I'm going to do and how I'm going to do it. So that's how I mitigate. Of course, I can show the graphs and the tables and the calculations. I do have the percentages. I do have the but for me, it's like I don't have a percentage of likelihood. I don't know, and I can never know if Petrobras is going up or down. So it's not about that. It's about that. If it goes up, this is going to happen. If it goes down, this is going to happen. So for me to mitigate my risk, I have to know what's going to happen, and then I decide my limits, right? So because it's like buying, I can move a little bit up or down. If it's selling, I can move up or down to mitigate the risk. And then of course my Excel, my the formulas I made in my spreadsheet, we already calculate the percentages that I need to know for that. So basically,
Sure.
for me to mitigate the risk, I just open a little bit more the range or close a little bit more the range that I want. If I want more risk, more money, I close the range. I have a narrow range to work with, but it's more money. If I want to take less risk, I open the range, so
Hmm.
less money, but still more chance to win. Kind of thing. So that's the
Of
idea.
course. Of course. I will use a very I will use an adjective that totally doesn't go with the stock options with stock market in general. But is there a simple formula to work with. For example, oh, it's the 90% of chance of lose, so I will put 5% of my money. It's 80% of chance of losing. I'll put 15% of my money. Is there something like that, or it's much more
Well,
complex than that?
I mean, like, of course, these numbers you were making just an example, but I would never bet on something that I have 80% of chance of losing, right?
Sure.
But for example, I'm just to try to answer your question. Maybe there are some strategies like that. Maybe some people do that, but I don't. I don't know how to do that. What I basically the simple way to do it is that stock options is actually simple. It's complicated to get there, because you have to learn a lot of things before you learn about options. But when you learn about options, it's actually very simple. So the strategies are quite simple. I buy the stocks, I sell a couple of contracts, and I let it happen. And then when it happens, if it goes down, I do something. If it goes up, I do something else. So it's very
Yeah.
simple to do it after you learn everything. Of course, to learn it, it's complicated because it's very different from everything that we work with. But once you learn it, it's not complicated. So there are simple strategies. Also, if that's what you're asking, there are simple strategies. There are simple things. You just sell one contract and get the money, and then sell it for the price you agreed. You still make money, right? But there are very complicated ones that you buy here, you buy there, in a way that you try to close the risks here and there. But that's the thing. So I don't think in the stock market there is a way for you to calculate there is 70% of me winning or not, because you never know where it's going. So it's I think it's very hard for you to calculate the percentage of chance of something going right in the stock market.
Hmm. Yes, absolutely. Uh, you were telling me before, your father works with it professionally, right? He's got his a company or something. You guys have a
Well, we did.
company.
We
What is it
work
exactly?
professionally together on this. Yeah.
So it's a CNPJ, right? The
I'm sorry.
CNPJ, there. It's a CNPJ, right?
Yes, yes, yes,
Okay. So it means my point is it means you guys have clients.
yes.
Okay. So talking to possible, I don't know if you guys are taking. I don't know what is the demand on it and how much you can if you're already working full,
No,
full schedule. But anyways, if for possible future clients or even possible future investors, right? Uh,
no.
what should they do? What should one do to get started with the options?
To work with us in our company, for example,
No,
to be
no,
our
yeah,
client.
well, yes, and of course, if not, with stock options in general, what
All
should be
right.
the
So
first steps?
if you want to invest personally, all right, without going through our company, my suggestion is, I mean, is very, how can I say, obvious. It's just study. You have to study. You have to read.
Hmm.
But my other my so this is the first one, right? So you have to study. There's nothing. It's not only this. There's nothing in life you're going to start working and make good
Yeah,
money out of it if you don't really study, if you don't learn, if you don't become a professional in it, right?
sure.
But a lot of people don't understand that. They think they can invest in the stock market on the side as they were working. Of course, you can go there, put 5,000 reais in the stock market, and one day Petrobras goes up, and then you make 1,000 reais, and you are super happy. Yes, you invest in the stock market, but you're not working professionally with this. You know
Yeah,
what I mean? Professionally or investing as a real investor. Um, so another thing is I don't think a lot of people can work with stock markets and in their job at the same time. So I think that most people that want to invest in the stock market and they don't want to give up their jobs, they need to hire a company or a person or a consultant to do that, because a lot of
yeah,
people believe they can study and they can do that on the side, but the hours of the stock market is the normal business hours. So how can be in your office or in the factory or
sure.
in the field, and
Yes.
then on your cell phone you are buying and selling stocks? Man, that doesn't work.
Yeah.
So either you make a plan. So I want to change my, so I have a friend, for example, a close friend, that he changed professions. He wanted to be a day trader, right? To work with the stock market and trading every day. So
Hmm.
he wanted to be a day trader. So he studied for 10 years. And then gradually he was changing his professions. And then eventually now he's a full time trader. But he planned on it, he studied, and he planned to leave his job to do that. It's very risky, but still, that's how I picture working out. You know what I mean?
Sure.
Because I know some people that they're trying to do their jobs and invest at the same time. Sometimes they get lucky. Most of the times they don't.
Sure. No, but when I say clients, that's exactly what I mean, right? If some, I don't know how to call these companies, but some companies take your money and then they agree in a possible amount of profit. You know, one
So they,
percent.
they don't
Actually, it's
do that
point
because
zero. It's
that's
point.
illegal. That's
Huh?
illegal. What do you think is illegal? What you describe is illegal. So if you ever come across a person or a company that is asking your money directly or is promising you a certain amount of return, that those actions are illegal. And even if they weren't illegal, they are very shady because first of all, you should never give your money in someone else's hand, right? So I
Sure.
will explain later how I managed my clients' money in a secure way, which I can never steal their money if I wanted. So that's the first step. You never invest with someone that the person can possibly take your money. Oh, but it's my cousin. But if your cousin's kids are hungry, you won't think twice about taking this money. You know what I mean? So that's the point. You have to invest in a way that the person who is investing for you can't take the money. Even if you trust the person, you never know what happens in the future. And second of all, I can never um, guarantee 4% return. What if the market goes down? What if Petrobras go broke? How can I guarantee that?
Yeah.
So
Sure.
those actions are illegal. So what do you have to look for in a company or in a consultant that you want to invest with? They cannot take your money. They cannot guarantee return. So those are the basic things. So if they're doing this, probably it's a pyramid because
But
what is
isn't what brokers do? Financial brokers.
no, they don't do that. First of all, for example, you open your own account where only you have access to your money.
Mm-hmm.
And second of all, they cannot if they promise return, they're doing it wrong. Because
Sure.
what they do is that they are paying
Mm-hmm.
you with the next person who starts investing. And
Sure.
that's the base of
Yeah.
a pyramid, right?
Sure. Sure.
So what happens is what they do, they in theory they're going to invest this money, or they're going to give you some recommendations on how to invest this money in the best way possible.
Mm-hmm.
So what I do, for instance, so more specifically, what I do is like you will open your account, so I don't have access to the money, for example. So the only way this money gets out of your account in the broker is for you to take out directly to your own bank account. I can invest for you, but I
Mm-hmm.
cannot touch the money.
All right.
So that's the
Okay.
thing. So I will invest through your account, for example,
Uh-huh.
or I will give you a suggestion, then you do it in your account, but I can never, I will never receive your money. So don't give me your
Sure.
money. I don't
Sure.
want your money.
Of course. Sorry about my ignorance. I'm just asking because
No, no,
I
that's a
feel
good question.
things
That's a good
are
question because
possible.
a lot of people get. I know I have a lot of friends that are invested with someone that is promising a certain return, or they gave the money to their cousins to invest. So that's a good question because a lot of people don't have this feeling because they say, oh, it's my relative, it's my cousin, it's my brother, they're never going to take my money. I hope you're right, but it's a big
Sure.
risk,
Sure.
right?
They can promise. They can promise. Yeah. Sure.
Yeah.
Of course. Of
So and
course.
then so how do I get paid? The customer, my client has to go to his account and pay me direct. So I don't keep my fee. The,
Mm-hmm.
the, the client has to pay me my fee. You know what I mean? So I don't touch the
Yes.
money. And I don't guarantee any return, which means that sometimes we will have losses and sometimes we will have gains. And that's how it should be. But because of competition, because of market, it's like, oh, so for example, I can take a look at my previous result and say, on average, I got 5%. And then I can say, oh, if you invest with me, I will give you 5%. But another rule in the stock market investment is that the past does not guarantee the future. So yes, last year I could have had 5% on average, but still I cannot guarantee the next year is going to be the same. So don't go for people who are guaranteeing or for people who want your money. That's a scam.
Very good word of advice. deep down, I was waiting that I could just handle you $10,000 without having to study, and you would promise me
Oh yeah,
fifty percent
to
return.
be the client, technically you don't need to study anything. You just, you don't give my money. You don't give the money to me. You open an account. You put this money in the account, and then I operate through this account. So okay, I'm still inside your account, but I cannot take the money because the money goes directly to your bank.
Sure. Yeah, this is my bottom bottom line here. You guys work this way, right? You guys have this kind of clients, right?
Yes.
Like this. Okay, that's it.
So for
Okay,
example,
so
I have two clients, and my dad has another two clients.
okay,
So we're small companies. Like we invest for ourselves, and we investing for people who like what we do, like the investment that we do, and they decide to invest with us. So our clients today are close people. So for example, well, one of my clients is a former student of mine, but it's just so we don't really advertise. Okay, it might seem that I'm advertising right now, but we don't advertise. We don't go and it's like, oh, invest with us
sure.
and advertise on the internet or something. No, you know what I invest, and then you ask, oh, no, I like what you're doing. Can I see more? And I show you more, and they say, oh, I like what you do. Can you invest for me? Of course, I can invest for you.
Hmm.
But I don't advertise. I don't try to get people to invest with me because the thing is, not everybody is ready to take risks.
Sure,
This kind of risk, right? So,
sure.
so a lot of people are ready to take other kinds of risks, like I don't know, skydiving or something, but they're not ready to take monetary risk, which is a completely different story. So, if you are going to lose sleep at night because you invest in the stock market, you should never invest. You have to be, I mean, you have to be calm. You have to be happy with this idea. You have to, of course, when you lose money, you are worried. But if you're going to be losing sleep over it, don't do it. Invest in something safer.
Sure.
That's another thing. But let me just conclude that question that you asked. Like, okay, what if someone wants to work with me? What do they need to do? Well, get in contact with me, and then of course we start talking from there. But I do recommend that people that are investing with me study a little bit and understand what I'm doing because it's a little bit weird to me that people
Yeah,
are investing and they don't know what they are investing on. You know what I
yeah,
mean?
sure,
So yeah. So if you want to invest, I would recommend that you understand at least what options are. So at least understand. You don't have to understand the strategies. You don't have to understand how to do it, but understand the market, understand what I'm doing, or understand what I'm working with. You know what I mean? And then and then and then it's just I don't think clients have to do much. Of course, they have to be willing to invest. They have to understand risk. They have to have the money for it, and then we start talking from there. You know what I mean?
here's my next question. How much? Of course, I know it varies from person to person, but usually, what is the first amount that it's interesting to start working with?
Well, with what I work with, it has to be a considerable amount because what we work with is strategies that make that we can have extra income, and you need money to make money, right? So for you to
Yeah.
make an extra income, you need a reasonable amount of money to make a reasonable amount of income. So what is this amount of money that I'm talking about? Is we start at least with 50 grand, 50,000 hands. Why 50,000? My gosh, it's a lot of money. Yes, it is a lot of money. But if you invest 1,000 reais, you're gonna get 20 reais off it, and it's not really an income, right? So now
Sure.
with 50,000 reais, you can start making 3,000 reais out of it, 5,000 reais out of it a month,
Hmm.
and then sounds more like of income, right?
Sure.
So and then a lot of people question me, it's like, why do I need so much money? And then I make the parallel with a company. If you're going to open a hamburger place, you need 200,000 reais to start a hamburger place, and then to start making 1,000, then 2,000, 3,000 reais a month. So anything that you're going to invest, you need a considerable amount of money. It's not only this. If you want to buy an apartment to rent it, you have to pay the price of an apartment to do this investment. So
Sure.
50,000 reais sounds like a lot, but compared to other investments, it's not actually.
Sure. Yeah. One special word I would like to know about it, and I always tell my English students that the difference between Latin words and Germanic words, right? Like expect and wait, for example. And I like their reaction when I tell them that words that sound simple to us Brazilians, to English native speakers, sound complex or academical. So I'm gonna
This
just
is
drop
sounds
one here. I'm gonna
right?
drop one here. For Brazilians, okay, no problem. But if there's someone from the United States or England watching us, hi, and I hope you know this word, liquidity. What is the liquidity of a this kind of investment? In other words, I change my mind. I need the money, or I just house it so I can get it back if I can get it back, of course. This fifty
It's
thousand
well, no,
k.
we will always have we will always be able to get it back. The liquidity is fairly high. It's fairly liquid.
Yeah,
Of course, there are some things that you should consider, but of course, in times of emergency, that doesn't matter. But for example, the optimal situation is that you are investing with me, and then you say, "Brother, next month I will need all my money because I will buy an apartment or something." Okay, next month we close everything that we have, and then you get all the money. So that's the optimal situation, right? Because I can plan, we don't lose money doing this, and all. But if
sure,
I need the money now, something happened, and I need the money now, well, I need half an hour, and then half an hour to give the money. But you
hmm,
will have to be willing to accept the market's value.
sure,
That's the problem. So in terms of time, it's very liquid, right? You can get the money right now. However, you have to accept the prices of the market now. If you can wait until next month, and then we can make a good deal, we can close the strategies, we can actually make money out of it, and then you get all your money. But if an emergency, in terms of time, I think it's half an hour for the bank to process all this transfer.
sure. No, that's a good one. That's one of the most important things to consider in all kinds of investments, right?
Yeah,
How can I get my money back? And there's a name for
exactly.
it, liquidity, right? That doesn't.
Yeah, because when you invest, as my example before, you open a hamburger place, and then you decide that you don't want to work with this anymore. You have to sell the damn thing, and
Yeah,
you're probably going to lose money to sell in such an urgency situation, right?
yeah. Well, I think it's been fairly clear, crystal clear from so far. But I'll just ask this as the last question, and to see your personal reaction about that, as coming from someone who works with that, who's passionate about it. And okay, what are the pros and cons of this kind of business?
So yeah, so one of the biggest pro is that you can make a lot of money, right? So is the market that if you know how to do it, if you're willing to take the risk, make a lot of money, right? Another pro of the way I work with, I think the risk is manageable or at least controlled or at least known. Okay, so you know the risk. So maybe you can't control the risk as you're thinking, but you know the risk and then decide to accept it or not. So I think those are the pros that I can think of right now. And the cons are just the opposite, right? So it can be too risky and you can lose a lot of money. But again, for you to lose a lot of money, you have to do something wrong. Because if you study, if you manage the risk, if you do the strategies correctly, you don't lose a lot of money. Sometimes you lose just a little bit, and sometimes you make less money,
Sure.
right? So the cons are this. The cons are it is dangerous. It is dangerous, and it's very volatile, and that right. So, for example, what happened with Petrobras, it's directly related to what's happening in the government. So, if the government's not doing so well, the business can be harmed. You know what I mean? So,
Sure.
it's another con, right? So, a lot of things can influence the market. So international happenings will influence in the stock market here in Brazil as well. So that's another
And you
problem.
will absolutely and certainly have to get out of your comfort zone, because you have to pay more attention to what's going on, right? Many
Yes,
people
well,
already do that, but
geopolitics. If you don't like geopolitics
yeah,
and those kind of things, yes, you wouldn't be able to invest on your own because you have to like this, you have to understand this, you have to follow this. I say, okay, as a client, you don't need to follow this, but as a investor, you have to know what's going on with Russia and the oil producing countries. It's like if
Sure.
they're going to
Yeah.
go on war or something. Because if they go on war, it will impact directly in the prices of Petrobras.
Yeah, absolutely. Yeah, of course. Galdão, thank you so much, man. It's been a very, very clear conversation. I believe anyone who can, of course, understand words in English will be pretty well informed in this area. So thank you. I know it's summarized. Of course, there's much more. As
Yeah.
you said it, as you pointed it very clearly at the beginning of the conversation, you should study, right? If you want to start, get started on it. But of course, if you want to know exactly what this is about, I believe it's been a very, very fairly clear. And I'm taking myself as an example. I started this conversation not exactly understanding what this options thing was about, and now I pretty much know. So thank you so much, and
No problem.
I will risking to get this channel shut down in the future. Maybe I could drop you a pre-invitation of coming back in the future to talk geopolitics. What do you say?
No problem. No
All right.
problem. So I would like to thank you for the opportunity first to talk about that, and let me talk about my work a little bit. I also want to open my for anybody who wants to talk to me. So you don't, if anybody wants to just talk and understand a little bit more about the stock options market, feel free to contact me. My father also is. We are very good with that. We teach people, as I said, the more people invest in the stock market, the better for us. So I don't mind teaching people or talking to people about this, even if they don't invest with me. I don't mind teaching people or helping people understand this market a little bit more. And also, I leave the invitation. If you are thinking about investing, you can talk to me and get more details on what I do.
Cool. Thank you so much, man. Thanks everyone for that are here so far. Appreciate that. Galdão, thank you so much, man. See you soon.
Bye-bye.
Take care. Bye bye,
Take
bro.
care. Bye-bye.